Hi, everyone. It's Alissa Coram here, and welcome to Monthly Market Report for the month of December. I'm joined, as always, by hedge fund manager and founder of the Roppel Report, Jim Roppel. Jim, great to see you as always.
Great to see you and Happy New Year.
Happy New Year. Jim, oh my gosh, the month of December. We've got a lot to talk about.
We really do. It's
We
been quite a month.
do.
It's been quite a quarter,
It has. Oh, wow.
quite a
Yes,
year,
I
quite a year.
know.
30% NASDAQ.
Yeah. I mean, who can complain about a little volatility at the year end, especially Jim, when you have someone like you, which major props once again for some prescient advice. You were hedging ahead of that big drop on December 18th.
Hedging has become a really big tool in my toolkit. It's saved my butt. And I mean, we've had a very choppy period here. It's been volatility both ways. And this month has been kind of rough. And, the Santa Claus rally is real, but that's the index. And the highly appreciated stocks just between Christmas and New Year's seem to get killed. And if you give money away to charities or you give I give highly appreciated stock, they're mandated to sell it immediately. And everybody waits, like they go, oh, taxes. If I don't give that stock away right now, I can't write it off this year. So everyone's wiring out, going to Fidelity, signing the thing, send it off to my favorite charity, and they're dumping this stuff. And then, when you have a monster year, well, first of all, the Santa Claus rally, it's only like 1.5% over X number of days. Who cares? That's nothing. That's a day. And
Mhm.
Santa did not show up this year, and
Yeah.
today's close did not make it any more optimistic for tomorrow. Uh, I have this horrible history between Christmas and New Year's Eve where I just get crankier and crankier because my monsters melt down. Hedge fund managers are locking down profits, and
Right.
I think when the Fed came out hawkish, they hedge fund managers just said, "I'm not waiting for year end. I'm dumping this stuff right now." And I think that's why we had that wicked. I don't know why. It's a
Mhm.
guess, but
It was wicked, and we've definitely seen a pickup in the volatility since then. Um, but in terms of the backdrop and what you see from here, I guess, short term and medium term, what would you say is your outlook?
in the immediate future, I put Roppel Report temperature 3 out of 10. I'm
Mm.
very cautious right here. I mean, the short-term indicators have become very muddy and negative. And then that historical selling after a monster year, people that want to delay their gains
Mhm.
15 months instead of selling right now and paying in 3. I think we could get pounded on January 2nd, 3rd. I mean, in 2000, January, first day of trading in January, the NASDAQ went down 7% in like 2 days. So I think we could see that. So sure. But post that, I am monster. Look at that.
Mhm.
I'm I'm super. There you go. That's 7% in 2 days. And I don't count that out. That's a long shot, 7%. But if we were down 3 or 4, I am going in I'm really hedged heavy, and I'm gonna pile it on into the illiquidity tomorrow. So but you said outlook.
Mhm.
I think we need to get through chop. I think the dollar needs to break or at least not stop going up. And then I think next year, you said the backdrop.
Mhm.
I mean, I've been doing this for right on 40 years, almost exactly to the month. I was Series 7's licensed 40 years ago this month. I've never seen a backdrop like this in my whole life, ever. Not the dominant fundamental factors. I hate to say this. I'll just use the word the new administration. Don't throw things at me. But we have Elon Musk, Vivek Ramaswamy, Howard Lutnick, past CEO of Cantor Fitzgerald, Scott Bessent. He is a global macro hedge fund manager. David Sachs, venture capitalist. I'm
Mhm.
reading, and I don't. I met a couple of these guys. Anyway, these are the most pro-business cabinet America's ever had.
Right.
Instead of
Pro
throwing
business, pro
pro-business,
innovation, deregulation, corporate tax cuts, which should boost earnings. So investors should like that.
what about crypto? These
Mm.
guys combined own over $500 million of Bitcoin. They threw that. Look, what's his name? The guy we got to get rid of. He says,
Gary
I'm
Gensler.
resigning on election or inauguration day. He's the worst. I mean, we're going to take the sand out of the gears, pump 3 million more barrels of oil a day and oil the gears, get the golden goose's wings flapping even harder and the gears of commerce turning. Mergers. I mean, I know you're super young, but back in the day in the 80s, it was merger mania. It
Mm.
was a merger every 2, 3 weeks. And what that
Wow.
does for the market, and then the IPO market is close. We've had like what 15 or 20 IPOs this year. At the 2000 top, we had 375 IPOs that year.
Wow.
Okay,
Yeah.
so
That's a
we're
big
so
difference.
early in this thing. How about the Department of Doge? Let's cut 2.5 trillion out of a $6 trillion economy. What's that going to do? And the government crowds out spending. Okay, so we take that out, the economy can flourish. AI, we haven't even discussed AI. I mean, what do you do when corporations start to implement AI and they become more efficient and their margins expand? What happens if the average company in the S&P's margins expand by 3%? What's that going to do for the PE of the S&P? And then
Yeah.
it's deflationary.
Mm.
I mean,
Right. Because I think that's the concern, inflation and what the Fed is going to do, because clearly December 18th, that was a Fed reaction. Oh, maybe, the Fed's not gonna cut rates as much as once was expected in 2025.
that's for sure, but that target moves like crazy. Coming into
Yeah.
this year,
It
I think people were looking for 7 cuts or
exactly.
something.
Yeah, it moved so much this year.
But there's first of all, the Fed is not hawkish. They're still going to cut just on a slower scale. And if they're going to slow it down because the economy is strong, the economy's still strong and they're going to still cut. Now here's the caveat, all
Yeah.
right? If rates start going up because inflation heats up, that's a really different picture. But I don't see it. I mean, employment's a little soft, housing is weak. Um, it's almost a Goldilocks scenario. 40 years in the business, you said backdrop. The
Mhm.
dominant fundamental factor is definitively the new administration, an AI, dovish Fed. I mean, and there is froth. There's a little bit of froth with these quantum names. I think they're kind of
Yeah.
low quality. The best quantum name is Google, which was completely in the doghouse a month ago. Like low RS, below the 50, choppy, and now it's really looks great.
Yeah, and here it is. Here's a look at the daily chart of Google parent Alphabet and the weekly. So definitely showing relative strength here, Jim.
Look at that wall of blue volume in the last 3, 4 weeks. I mean, Mag 7 is crazy strong. I mean,
Right.
crazy strong.
Which is why the NASDAQ is looking so good. I guess that would be the other concern, Jim, in terms of the 2025 outlook. It seems like stock pickers market is the name of the game.
Dead on. I do not think, although I am bullish for the year, I think that we're going to have a tougher time with less wind in our sails. So the individual stock picker is going to rise to the top. But I do think the wind is in the market sales. I have, if I was next month, let's do predictions for the year. I have a
Okay,
I have a whole sheet of them. I
let's
would
do
love
it.
to share. I have to give them my subscribers first, but next, you want to do that? And we'll both
Yeah.
pick targets for the Nasdaq.
Oh, okay. I've never done that. Sounds
Um,
good. Sounds fun.
but one thing we didn't talk about, we
Mhm.
mentioned Google. Nvidia. Google looked like crap 3, 4 weeks ago. If you look at
Mhm.
Nvidia, or you look at Google first,
Right.
it cracked violently below the 50-day. It relative strength back there was like
Real
50,
bad.
40 or something. Um, Now look at Nvidia, please.
Had an update today. It's hanging in there.
So it's been defying the down days in the market. It's
Mhm.
right on the 50-day. And
Mhm.
NVIDIA reminds me of Google about 4 or 5 weeks ago, except it's actually a better setup. And if you
Right.
look at SMH on a weekly,
You seeing it?
look at that. Look
Yeah.
at how tight it's getting in there. It's holding above the MA. We come out of there, NVIDIA could light up the tape. Now, if it breaks down to the downside, that's going to be just as negative. But look at
Right.
TSM. I think it's wildly underrated in its significance. It's a $1 trillion foundry,
Mhm.
and it did try to come out 3 or 4 days ago, but with the market this ugly, or it's not allowing things to come out really right now.
Yeah.
But that is a big signal to me. Um,
Mhm.
if you get NVIDIA to engage with Apple rocking, Netflix rocking,
Mm.
Google rocking, the whole Mag 7 is, oh my gosh, how could we not talk about Amazon?
Yeah. Amazon's looking pretty good too.
And everybody's freaking about the transportation average. What if it's just that Amazon has a better logistics system and delivery? I mean, IYT did crack, and that's a significant negative. But I don't think commerce really travels in hard goods like it used to. I mean, trucking, we're in a digital world. Commerce goes over the internet. So I think Amazon is such a great proxy for the real underpinning. And also Uber has a big position in the transport average, which looks like
Right.
death.
Yeah. Absolutely. And then, of course, another mega cap tech, in full disclosure, I own it, is Tesla. What momentum this has seen, especially since the election, but even before that, the earnings report. I think that was a tricky time to be buying this one or initiating there, but for sure, it seems like it's been all systems go after the election,
I
which
think,
makes sense.
and Tesla to me is likely to be a absolute star next year. And this is kind of a sidebar segue, but
Mhm.
my family got a Roomba because of our new dog, and I'm sitting there watching this thing. I'm like, this is free labor. This is a dumb robot. This is
Right.
very basic.
Yeah.
And I'm like, oh my gosh, I can see the possibilities for what might go on here.
Hmm.
By the way, I was a mega bear on Tesla for 3 years. Like, I hated it. But now it is born again. Institutions are gobbling this thing up. It's, by the way, it is an institutional darling. And this
Wow.
is a monster breakout over what 274 was the pivot. And then there were multiple others totally entitled to a digestion. But next year, this has got to be on the hit parade list. And what are the possibilities for where this could go? I mean, like 800 a share is not, that's not crazy at all. Um, and longer,
Definitely has, momentum and the story in its favor.
oh, and by the way, Elon Musk is almost the vice president of the United States, and JD Vance is a private equity guy. I mean, just look at the stack of this cabinet. If you don't make, if we can't make money, and by the way, Trump gauges his success on the market performance. I I just don't see these guys throwing sand in the gears. I see them throwing oil in the gears. And if you look at oil, what if, oil's been incredibly docile in like a multi-year downtrend.
Mhm.
And Scott Bissett says, we want to pump 3 million more barrels a day. If it breaks 65, there's no real support till like 45. And that is, I think every dollar up or down is $1 billion tax or surplus to the US economy. And
Mm.
that chokes off all these terrorists and dictators, these natural resource despots. You crack oil, the economy flourishes, terrorism goes down. Israeli stock market, do you know that it beat the US market this year? With all the fear and Hamas and all these bad characters, and the market beat the US, Israeli
Wow,
market.
that's impressive.
Fear. There's a lot of fear out there. There's the Buffett indicator. And
Mhm.
remember when he dumped half his Apple position? It was like, oh, Apple's done. And look
Yeah,
at it now.
right.
I just love it when
Yeah, I
I
think
see
that
this
was
fear.
When was that? That was in the fall,
It
right?
was October-ish.
Yeah, somewhere in the fall.
Th
You can't
there's
even see it now on the chart.
well, people are crying about breath. "Oh, breath is terrible. It's the worst. It's the worst." I saw Bill on and off for 40 years. I have hundreds of pages of notes. There's not one word of breath. Bill never, at least with me, he never discussed breath.
Mhm.
So if Bill doesn't worry, I'm not worrying.
Yeah, I think especially if you are focused on the leading stocks and looking for that momentum, because I mean, in my screens that have, some fundamental and technical parameters, I'm seeing plenty of stuff setting up. So,
There's
you just have to be looking in the right places.
there's some froth, but there's also a lot of flags and 4 5 week digestions. And it's going to be hard for the market to go down if the Mag 7 doesn't break. Now that so hedging wise, I'm
Mhm.
shorting equal weighted indexes in the money
Mm,
calls, shorting the index outright.
okay.
That is options are such a valuable tool. I mean, they can really turbocharge your upside and save your bacon. And I don't like going long puts. I like to short calls, but that it's a higher risk strategy. But um, look, now is the time not to lose. Teacher,
Yeah.
call on me. I
Go
want to
for it.
Okay. I don't want people to give back this monster year. So I'm going to give you like 3 rules, super basic,
Yes.
that'll save your butt. When the market is below the 50-day,
Mhm.
your buying window shut, just shut. There's
Right.
no reason unless you get an upside reversal follow through day, or then you can re-engage.
Mhm.
If the market is above the 50-day by its
Mhm.
historical average for the last year or two, close the buying window. Are you
Right.
going to
So
like
extended, if it's extended,
It's
is
totally
what you're
extended,
saying.
and you're like, "Oh, yeah, I know, but this is breaking out." Yeah, okay, so maybe the Nasdaq's gonna extend another percent or 2 and then fall 5. If
Right.
you're buying when the market is that extended,
Yeah.
you're gambling that it's gonna extend into a historically higher level than it has.
Mhm.
Just cool it. And by the way, you're probably mega long already, so if it does extend into a greater level than it has historically, you're super long.
Yeah.
And that's where I did a lot of hedging up there this year. Many times I
Mhm.
was super lucky with that December 18th break. I didn't know. I just knew it was way overdone.
Yeah, exactly. So that's definitely a good thing to review. Any other rules to keep in mind, Jim?
If you have a stock that you love, like I love Cava, but it is living in the no-go zone, if it you this must for me must remain a max hedge position until it gets back above the 50, which could
Mhm.
take 6 months. I
Right.
don't know. But and by the way, there could be fraud. Who knows? It could be a complete scam and they're cooking the books and it's going to go to zero. I don't know. But if I'm hedged, I don't care. But they have what 350 stores. They're expecting 1,000 in 5 or 6 years. I think that
Mhm.
number's way light. I think they're going to have 1,500. Um,
And this hedging strategy, of course, Jim, and holding it versus just getting out with some of this all rules is triggered is because you have a low cost basis and a huge cushion and all of these other fundamental factors that you're mentioning. So that's why you're willing to sit with it with a hedge on.
I've had, I've
Because
had.
I sold it, but I don't think I didn't get in as low as you did.
Are you in a taxable account?
Yeah.
Okay. Well, I'll just tell you a quick story on
Well,
the
I do
IP
both. I do both.
in the IPO of Starbucks. I was just had a couple dates with my current wife. I walk in early. Sales manager goes, "Oh, early bird. Here's 1,000 shares of Starbucks." My girlfriend's like, "I want it." I'm like, I'm not sure." Gave it to my buddy, and I
Yeah.
gave the other part to my biggest customer. He made like $40 million on it. Now
Wow.
look at the earnings misses along the way, the bear markets. But
Right.
do they have 30,000 stores? Is that about right? Look, they have a lot. It's not now Starbucks is a more consumer non-durable and it's a lower cost price point, but there's going to be a lot of disappointments along the way if Cava does persevere and go from
Right.
300 stores to 1,000. It's not always going to be straight
Mhm.
up.
Right.
So I'm super bullish on it. Fundamentally, technically,
Mhm.
it's ugly.
Yeah. But again, you got in it, you know, when were you getting in? Like
Honestly,
this spring?
I'm not exactly sure. Yeah. Yes. Yes. I
Somewhere
was not super
somewhere
early,
pretty
but I caught it.
early enough when it
Yeah.
turned. Yeah. I wasn't getting in until that last retake of the 10 week. So I
Great
decided
point.
to just
Awesome. Awesome. Regaining the 10 week
Mhm.
on volume.
Yeah. Yeah. Looked great on the daily. I think the RS line was at or near a high when it was getting back above there too. But anyway, so it I wasn't in there as low as you were. But at any rate, yeah, I think that's a good example, if we are in this mega bull trend, how can investors, because I think a lot of people out there, they want to hold, they always ask us, what is the best stock for the next 3, 5, 10 years? And that's such a hard question to answer, right? But I think you're discussing it. If you have a strong entry, you build that good cushion, it has that story, and you're able to withstand the pullbacks and the bases along the way. That's how you get there. But there's no predicting in
Um,
advance per
but
se.
Bill taught me you have to use the product. Go to the store. Bill would go and literally count cars in Costco parking lot or Pick and Save or Price Company, whatever. I love their food. Most people I know say I go more, but it's so far from me. I need one closer.
Yeah.
That just says more locations to me.
Yeah.
I mean, and I want to go back to the 3 years up in a row.
Mm.
The Look at what happened through the internet revolution. We had multiple 3 year up in a row. Now, again, if you go back to the beginning, if you
Mhm.
assume that Netscape's IPO was the beginning, we had that was a long bull market, and I think this AI revolution is going to take
Yeah.
half. It took almost 30 years. If you say today we've discovered 90% of the uses for the internet, how long is it going to take to understand all of the possibilities for AI to build the infrastructure, get the data, build the
Right.
applications and monetize? That's going to take a decade.
Right.
We're likely to have multiple 3 year up in a row. Now, there will be asteroids, there'll be a currency
Mm.
crisis or housing crisis or something punctuating it along the way. But I've never seen conditions like this in my 40 years ever. We don't be shocked if kids who are graduating today just get this amazing, wave to surf in that gets them to mid range, midlife where they're going to have some serious money in their bank. I mean,
Yeah.
this is a huge opportunity, I think. And I mean for 10, 15 plus years, not the next. And everyone's so micro focused right now, like me. We just have to get through January 2nd and all this tax dumping.
Yeah.
That is crazy talk. If I wasn't running a hedge fund, I would not. I'd be kicking it. I'd be in Cabo. I would not be fretting this at all.
Well, that's reassuring, I'm sure, to a lot of investors out there. Okay, so we've talked a lot about the backdrop, how to handle stocks that do have that promise over the long haul, but maybe in the short term are struggling. You talked about your hedging strategies. You also talked about your buy switch and looking at the major indexes, especially the Nasdaq. I would say, but also the S&P 500. Does it depend, Jim, which one you lean on more? Is it the leading index, or is it always the Nasdaq that you're focused on? What would you say in terms of that buy switch? Because we are seeing a little bit of a divergence here. The S&P 500 is below that 10-week line. Is that adding to your caution here
Yes, but again, we're what
in the
2%
short term?
off the high. I mean, it's kind of been compressing. Yeah, my stocks are generally higher volatility. Again,
Mhm.
I almost always demand liquidity. So I'm looking at the highest liquidity, highest earnings growth, the magic elixir,
Right.
and my stocks more correlate to the Nasdaq.
Yeah.
And if you look at like equal weighted Nasdaq, it has really been struggling. And
Oof.
Russell hasn't done anything in about a year.
Mhm.
I mean, so it is a Mag 7 market at this minute. Now, MDY, by the way, which is the sweet spot of sweet spots, does look pretty good to me. I mean, is that MDY?
Mhm.
It is. Look, can you look at it on a weekly, please?
Let's look at it on a weekly.
This is really, if you can catch a small mid cap, that's going to go to a small, large cap, you just made a killing. And there's IPOs are almost all junk, low quality, no earnings, a lot of roadblocks still. You get to mid cap, you get a little seasoning, you've proven you have some staying power, and then all of a sudden you get all the canceling characteristics. Liquidity floods in from the institutions who've learned it, and that's where they're mature enough, but yet small enough where they can have really ramped up earnings growth, and you avoided a lot of potholes.
Mm.
So I love mid cap.
Okay. So we'll keep an eye out for some potential mid cap winners. Jim, the discussion on Cava makes me think of another stock that had a lot of promise and was great for a good amount of time, but the picture has changed, and that is Eli Lilly. So, talk to me about your updated outlook on this stock and the biotech sector. I mean, clearly we've seen the broader healthcare area weaken in a big way for the last couple of months. I mean, ever since early September. So there's definitely been a rotation out of the healthcare sector. Do you expect that to continue for the next little while?
You must read the Roppel Report. I mean, I was so raging bullish on Lilly, and new information's entered the
Yeah.
game. The new administration is going to fight procurement, and they're going to, and RFK is anti-drug, and the greatest names in the world can turn sour. You always have to be vigilant, but these are 100% no-go zones.
Mhm.
We are okay. Remember my rules? I said below the 50-day, you must hedge the position and assume it's going to go to the 200.
Yeah.
This
And
thing,
this
no,
had a look at that high volume when it broke.
it- this is not, look, my favorite, my family's always been in biotech, and I love XBI, but it has gone bad. I loved Lilly. I loved biotech. XBI had a failed breakout attempt,
Mhm.
and I love medical device. That sector is gone. ISRG is like the
Yeah.
last pillar hanging, and that's a phenomenal, phenomenal company.
Mhm.
But this
Right.
sector, there's winners and losers with government. Government picks, they choose, and they have decided to get the club out and beat these guys up. I mean, Trump is going to come out and pound on drug CEOs for pricing. That is, look what he did last time. Except he's smarter now. He has more experience. So anyway, I'm out on biotech,
Yeah.
short term, medical, and all this. But by the way, AI was supposed to benefit drug discovery more than almost any other area.
Mhm.
And that what's it is it GE? What's It's okay. It was an IPO AI drug company. That thing looks like
Yeah.
death.
I'm
So
trying to think. It shows you how it's out of favor because I can't remember it right now. But when it came out, yeah, that temporarily was exciting, the prospect of it. But yeah, not anything we're looking at anymore because it's just out of favor.
everything about this says no go zone. The
Yeah.
50s below the 200. The relative strength is collapsed to 28. It's a series of lower lows. I mean, nobody should.
Yeah.
If you understand technical analysis, you're. If Kathy Wood had this conversation, she would still be the number one fund manager, but she doesn't understand risk management or below the 50-day,
Yeah.
the
Yeah. It's
guardrail.
right. Our guardrail helps us constantly, helps me constantly. That is for sure. Okay, so do you want to talk about some new names that you are watching, Jim?
I will not give you my top 5 names for the new year. I will do that next month. I want to
Okay,
save that for some other people. But
some stocks setting up.
yeah, how about like Brothers Coffee? I'm super intrigued. These guys, by the way, management owns 24 or 5% of this. Look at that
Hmm.
digestion it's in. And it reminds me a lot of a very early Starbucks. I don't know if iced coffee has the market, but the earnings are coming around. I was very bullish initially, and then I just went into a slumber. I dismissed it, and I'm a massive hypocrite because I don't really like wide average daily ranges. This is a more volatile name.
Yeah.
But when I go to the stores and I see 2 lines with 4 people with their little computers, and cars, there's the car parking lot is so jammed. I saw people banging. I saw one car bang into another one. It's a mob scene. And I have subscribers, they send me videos like, "Jim, in Texas, there's it's a man." I'm like, "This is I like this very much." And the chart corroborates what I'm seeing, and I like it very much. I think there's a million jokes we can make, but Victoria's Secret has a new CEO. These are not my best ideas. They're just ideas that are improving. And I know you liked Abercrombie a while back. It's kind of that sector.
Yeah.
The CEO came in right around 18 dollars a share about 6 months ago. And the market likes this. And look at the volume drying up the last
Mhm.
3 weeks. Part of that's seasonal, volumes drying up in general, but through 50 or 49 on volume, this is a very good set. It's the handle's getting a little low. What is it? How far off the high is it we right now?
Let's see. Let me go to the weekly. 14% off
It's
the
getting
52-week high.
getting to the end of. I don't want to see it go down a lot more. Now, if we break bad and we get a shakeout and then it bubbles back up like a basketball underwater,
Mhm.
I'm going to get really bullish. And I don't know the fundamentals well enough to take a big stock position,
Right.
but through that 49, that is a could be a great option trade.
Mhm. Mhm. Yeah, I
Um,
don't pretend to know everything about every retail brand, but I would not have the kind of conviction in this one as I did in Abercrombie. But everything lined up. It was the story, the fundamentals, and the chart. You need all of that, right? So this definitely has the chart and the fundamentals there. So yeah, I guess it just depends on how much conviction you have that impacts your position size. That's what you're saying.
for sure. And
Yeah.
kind of sometimes I see stocks that I think are really faddish and they don't
Mhm.
have the durability that I would. So I understand that the life cycle of that trade is going to be probably be a lot shorter. But one
Mhm.
that's come back from the dead that's really caught my attention is Twilio.
Okay.
The pattern is
Mhm.
look at the tiny little 3 weeks tight handle where it explodes out of there.
Mhm.
Yes. And now it's digesting, it's uh, tightening up. It did have a kind of a rough week last week in volume, but over the no, there's overhead. I cannot ignore the overhead.
Yeah, on the
Um,
monthly here.
but this is a very attractive chart with a wall of blue, 1, 2, 3, 4, 6 weeks in a row up
Mhm.
volume, or that's months.
Yeah, oh yeah, I switched to the monthly on you. Yeah, Jim, it's interesting. It does seem like there's a number of software stocks that are looking interesting versus the chip sector. It seems like the pickings are a little bit more slim in chips, and there's a proliferation of watch list stocks over on the software side now. Whereas
I,
before it seemed a little bit the reverse.
we should look at IGV and then we should look at Avago and but IGV is telling. Well, first of all, I rely on others for a lot of research, and I'm reading that AI is starting to monetize in software.
Mhm.
Something like a ServiceNow, Oracle, the whole sector has kind of lit up,
Yeah.
and it's it's like who's going to benefit from AI first. So okay,
Mhm. Now
I
you wanna go
was
to Broadcom, or you still wanna talk about
let's look at
software?
AVGO,
Mhm.
please. I was so wowed with Nvidia's earnings that and you look at these they were single digit earnings growth. But last quarter, the world changed for Avago. The market embraced it, and it's now that's accelerating. Bill loved acceleration, and I think I I'm I don't know. I doubt it, but it's possible. Remember BlackBerry and RIM?
Yeah.
There was no other there was no smartphone. That was it. They
Mhm.
were everything, and that stock was one of my I romantically remember this a lot,
Did
but
you ever see that movie? They
no.
made a movie. I think I saw it on an airplane, but I think it was a Canadian film, but it was about RIM and
Yeah, RIM.
BlackBerry. You need to watch it. You
Well,
need to watch it, Jim.
it'd be a fond memory because this was a
Yeah.
question.
It
I
was
mean,
about how they came to be, the rise
look
and fall.
look at the beautiful cup and handle at the dead lows around around $12 a share. Coming out of there, this thing went nuclear, peaked with the market in early 2000, and then it imploded.
Mhm.
Now, nobody could see that at the time. They had 90, they were dominating the market like Nvidia, and then along comes Apple and
Right. Failed
obliterates
to
it.
adapt.
They that's it. They're over. A BlackBerry is no, it's is it a 50 cents a share or something? I don't even know.
I think they've tried to reinvent themselves to some extent with other products, but it is not what it once was by any stretch of the imagination.
I don't think Avago is going to demolish Nvidia, but it is more of a winner take
Mm.
most scenario. And if you look at these other semiconductors like Micron, Advanced Micro, and God forbid, look at ARM. ARM looks like a big head and shoulders top.
Yeah, that doesn't
This
look
looks
good.
bad. ASML, I do feel certainly Avago Broadcom is completely in gear and stronger than Nvidia. But
Oh yeah. I mean,
Nvidia,
look at this monthly chart.
this thing is sporting power
Mhm.
in another.
Uh,
But then I don't understand why the SMH is not as bad as all these others. SMH looks phenomenal to me,
I
assuming
guess
it comes up.
the weightings of NVIDIA and TSM, I believe.
It's got to be.
Mhm.
But I'm
Yeah.
very bullish on this area, and it's going to be hard for me to believe AI is going to roll on if semis don't engage.
Mhm. So that'll be a key thing to watch in 2025 for sure. All right. Anything else, Jim, that you want to cover today?
Do not give it back. I know so many people. I get all these calls. Oh, a subscriber gave this to me. And so when I start getting gifts at the end of the year, that is a hot market. It's a signal. Other hedge fund managers I know looking at beach houses, 30% bonuses for Wall Street across the board, froth in the quantum stocks,
Mhm.
tax related selling. Um, we may have some turbulence in the near future, but I cannot ignore the overall strongest backdrop I've ever seen in my 40 years. Like, I, there's just too much to be positive. Now, again, number one, don't give it back. Do not your hubris. Everybody, it's like we've got that intoxication going. I'm going to buy calls. I'm taking a bigger position. I'm going to
Mm.
lever up more.
Yeah.
That is a
Making riskier bets.
when I'm getting gifts from whatever, like that's a signal. It's too hot, maybe right now. If you came in, from Gilligan's Island or the mainland and you realize you have all this money in cash, this is not the time to deploy huge amounts of cash. Again, we're only about 2% over the 50-day on NASDAQ, but it's compressing. It's about
Mhm.
3% off the high, but 2% off the 50.
Mm.
I just think we have a little turbulence. Don't give it back until we don't really need a follow through day today, but I'm slightly cautious short term, but I think next year is going to be a monster stock pickers market. Our contest. We're having a contest. Next
Okay.
5 best stocks, so we
Oof.
can go over market caps or whatever, and target on Nasdaq.
Sounds good. And I actually have I just thought of something I meant to add earlier, but something that I want to add to the end. And full disclosure, I do own NVIDIA. And Jim, sounds like you're still in NVIDIA, right?
I'm very long Nvidia. I
Very long
remain
NVIDIA.
long. It's going to take. Look at what I've sat through. It's going to take a lot to get me out of
Yeah,
this.
at this point.
Yeah. Well,
But what I was going to say was just because I don't think we're going to have another episode until after this happens, but CEO Jensen Wong is going to be a keynote speaker at CES on January 6th. And the last time he was a keynote speaker, I believe it was in 2018 or so, perhaps 2019, one of those. But and I was there, and it was just announcement after partnership. I mean, he's going to come with some fireworks. Are the expectations too high? We'll have to see. We'll have to see. But I don't think that he would agree to be a keynote speaker at CES unless he had some major announcements planned and in store. So I'm looking at that as the next potential catalyst. It's not a lock, like you always say. It's not guaranteed, but that is what I'm looking for. I want to see a positive reaction from those CES announcements. We'll just have to see if that happens, and if so, what the magnitude of that reaction looks like.
I was unaware. So I'm so glad I listened to this show so I get all this great information.
Yeah.
I'm now I'm actually probably slightly more bullish than I was before you said that.
Well, we'll see what happens. It all comes down to the reaction, right? But that is happening. So
We need a one more thing moment. Oh, and by the way, one more thing, Steve Jobs.
there you go. Do you have one more thing, Jim?
I just want to say the golden goose is real. Oil breaking is going to suffocate terrorism. The conditions are phenomenal for speculation. And I think a lot of people in the next 5, 10 years are going to lock up and cement down their retirement of luxury. Golden goose is real. I'm finished. How
There
about
you
you?
go. Yeah, I think just manage risk. We always got to bring it back to that. Focus on quality, not just that next shiny object, right? Like you mentioned the quantum stocks. I mean, hey, I guess if you really feel like you can manage risk and you're dialed in with your entry and your position size and your stop, then that's one thing. But otherwise, I want to focus on a strategy that is sustainable for the long term, not, hey, how can I make 100% in 2 weeks by making these risky moves with these super speculative stocks that I don't really know anything about, but are just spiking left and right. I want to focus on that quality. I want to be picky, time my entries with hopefully good setups in the broad market. Because, like you said, if you have a good setup, but the index is extended, your timing can be off and you can get shaken out. So, focusing on entries, quality, risk management, and yeah, hopefully we get another great year.
Our mentor, every time I talked to him, he was not in a leader. He was in the single leader. Quantum stocks do not fit Can Slim. You want a swing trade, you want a
Yeah.
cowboy, that's fine, but expectations are really important.
Yeah.
Druckenmiller, probably greatest alive, averaged 30%. Buffett, less than 20. Most people I know are 50, 100% or more. We
From
need
this
to
year, yeah.
dial back
Mhm.
and remain super selective.
Mhm.
Reread Bill's book. When was the last time you read Reminiscences or How to Trade in Stocks? Keep that up front and center. So
Yeah,
that'll keep you from giving it away.
there you go. Exactly. Well said, Jim. Well, it's been a pleasure. This has been a great year. This was a new show for us this year, and I'd like to think it was a success. Maybe I'm a little biased, but I think
It's
it was a pretty great show that we had this year. So thank you for doing it with me.
it's super fun. I love
Yeah,
doing it. It's like this is not hard or painful. It's just fun.
we love it. We're just having fun.
I'm buying what you're selling.
There you go. All right. Well, thank you, Jim. And thanks everyone so much for watching this show every month. We really appreciate it as always. And we'll be back again next month for our next installment of Monthly Market Report. See you then.